Credit cards feel harmless. You tap, you swipe, you move on. No cash leaves your hand, no balance visibly drops. No immediate discomfort is felt. That's what makes them powerful. The experience feels smooth, effortless, and painless. And systems that remove friction tend to get used more than we realize. But behind that convenience is one of the most profitable financial systems ever created. Not because people are careless, but because the system is designed to profit quietly from delay. In this video, we're going to break down why credit cards generate billions for banks, how interest silently multiplies debt over time, and why many people underestimate the real cost of buy now, pay later. We'll also explain why rewards feel generous but aren't free, and why this system continues to grow even when people try to be responsible. Once you understand how this works, you won't just use credit differently, you'll see it differently. A credit card is not extra money. It's a short-term loan. Every time you swipe, the bank pays the merchant immediately on your behalf. You're given time to repay the bank later. That time gap is not generosity. It's the business model. The moment repayment is delayed, the system activates. And that's where profit begins. If the full balance isn't paid by the due date, interest is applied. Not once, not occasionally, but continuously. Small balances grow, large balances grow faster, and growth compounds quietly. Interest rates on credit cards are among the highest in consumer finance, not because banks are cruel, but because unsecured lending is extremely profitable when spread across millions of users. Banks don't demand full repayment. They encourage minimum payments. This keeps accounts active, balances alive, interest flowing. You feel responsible because you're paying something. The bank feels satisfied because the debt remains. What appears to be flexibility is actually optimization. The system isn't designed to punish you. It's designed to keep you paying for as long as possible. Interest isn't the only income stream. There are late fees, annual fees, foreign transaction fees, balance transfer fees. Each one seems small on its own, but multiplied across millions of users, they become massive. Most people don't notice them individually. Banks don't need them to hurt. They need them to repeat. Cashback and reward points feel like benefits, but they're funded by interest, merchant transaction fees, and spending behavior. Rewards are not gifts, they're incentives. They encourage more usage, more spending, and more dependence on credit. The more the system is used, the more predictable it becomes. Credit card debt is stable. Many people carry balances for years. This creates reliable, recurring income for banks. Not from spending, but from time. Waiting earns money. And systems that profit from waiting don't need perfect behavior, just consistent participation. Credit cards offer speed, safety, and access. They reduce friction. They separate action from consequence. They make spending feel lighter, and humans naturally prefer now over later. Banks understand this psychology deeply. They didn't invent it, they built around it. Credit cards are not evil, but misunderstanding them is expensive. Used carefully, they're tools. Used automatically, they become profit engines for someone else. The danger isn't the card, it's unconscious usage. The mistake isn't using credit. The mistake is letting convenience replace awareness. Once you understand how banks earn, you stop asking, "Can I afford the payment?" and start asking, "Who profits from this delay?" That question alone changes behavior. Understanding the system changes how you use it. Credit cards work best when they're treated as payment tools, not borrowing tools. That means using them only for expenses you already have the cash to cover. Paying the full balance before interest activates. Using rewards strategically, not as a reason to spend more. The moment interest starts accruing, the advantage shifts away from you. The goal isn't to avoid credit. The goal is to avoid becoming predictable income. Credit cards don't make banks rich because people are irresponsible. They do it because the system is engineered to profit from time, frictionless spending, and delayed consequences. Understanding this doesn't mean rejecting credit. It means using it on your terms. This is Business Decoded, how money and businesses really work without the noise.